Hello, I'm about to get a settlement offer possibly for $1 million. I had a work injury and my lawyer says I'll likely walk away with $1 million after everything is paid. Where and how do I start investing? Wow. Well, here's what you should do. Now, before you go out and spend a penny, there are 3 things that I need you to do. Number 1 is make sure you actually get this money in your bank account. Number 2, call an attorney. Number 3, call an accountant. And the reason why is because generally speaking, as an attorney who's not your attorney, settlement income is taxable, but personal injury settlement income isn't always taxable. So get a good advisor here to help you out with this. Now, once you do that preliminary stuff, the next thing that I want you to do is I want you to pull out your bank statements, your financial statements, and I want you to write down every single debt that you have. Your student loan debt, your credit card debt, your car loans, your mortgage, any sorts of debt that you have, I want you to write those down. And the first thing that I would do with this money, if I was you, is I would pay off all of my non-mortgage debt. So I'm going to assume that you have $50,000 worth of student loans, credit card debt, car loans. Pay all of that off before you do anything else. The second thing that I would do is save some cash to protect me against anything in the future. So figure out your monthly expenses, pull out your bank statement, and figure out how much money you're spending every single month on an average month. And I'm going to assume that you're spending $8,000 a month. I know, a lot of money, but we're just going to stick with that for this example. Now take that number, multiply it by 12, which would be $96,000. So I'm going to round it up to $100,000. You're going to save 12 months worth of expenses in a savings account to protect you against an emergency. This is not money you can use to buy a car. This is not money you're going to use to finance a new house. This is money that's just sitting there ready to protect you in case an emergency happens. 3, take the money that you have left and use it smartly. And what that means is you started off with $1 million, use $50,000 to pay off all of your non-mortgage debts. Then you saved $100,000, which means you have $850,000 left in your bank account. Take that number divided by 2. So $850,000 by 2 is $425,000. And that means you're going to take $425,000 and you're going to use that to pay down your mortgage. And then you're going to take the other $425,000 and you're going to put this money to work in your investments. And then you have number 4, go back to work like normal. Now you're going to say, well, Jaspreet, if I just got $1 million settlement, why would I want to go back to work? Why can't they go on a big fancy vacation? Why can't they go quit my job and live life? Well, there's a few things you got to understand. Number 1, this is a settlement that you got for an injury. This isn't money that you won from a lottery. Number 2 is that I want you to build real wealth, not just blow that money, have a good couple of years and then wonder where all your money went. Number 3 is I want you to understand how you can buy that freedom and how you're going to get that freedom now. And number 4, $1 million is not enough for you for the rest of your life. So let me break this all down, starting with number 1. But I also want you to understand and remember that on August 15th, 1971, the United States dollar was taken off of the gold standard. And, well, because of that, on August 14th and August 15th, I'm hosting a live, free, and virtual investor summit where I'm going to be talking about, number 1, how money has changed over the last number of decades. Number 2, how the economic opportunities has changed and how you can find investment opportunities in today's economy where we still have high inflation, where we're still seeing higher interest rates, and now we're seeing a slowing economy. So if you want to see how you can find new investment opportunities and build wealth in this changing economy, it's a completely free workshop and it's live, and I got the link to how you can join. All you gotta do is register down in the description below. If you've ever been involved with a lawsuit before, you know that they are brutal and the only people that want to be there are the attorneys because they're the ones that are getting paid. So if you're getting a settlement, it's because it's a way for you to end this case. So I want you to be smart with this money, and that's what I wanted to emphasize here. Number 2 is I want you to build wealth here. And especially if you're newer in your financial education journey, because the question was, how do I start investing if I get $1 million windfall? Well, this is where you gotta be smart. And the first thing you gotta do is get rid of all of your expenses. That way you can be financially free and not have to worry about money again. And that's why the first thing you gotta do is pay off all of those debts that are not your mortgage debt. And then you build some savings, that way you have some cash to fall back on. Ideally, I would take the $100,000 and put it into a high interest savings account and not think about it, because this is money that I want to just sit there and I don't have to worry about it again. And then I want to work to pay down that mortgage and start investing my money, because investing my money is how I'm going to build wealth. I'll talk about how you can invest that money in just a second. Paying down the mortgage is how I can be financially free and not have to worry about payments again. Sure, you still got to pay your taxes and your insurance, but if you don't have a mortgage expense, which is the largest expense for the average American, Well, now you can be much more free, have a lot more freedom and a lot less financial stress. But also notice that I emphasize here the importance of investing your money. And when I'm talking about investing your money here, one of the things that I like to invest for is income or cash flow. Some people like to call it passive income. I prefer to call it cash flow. What that means is if you take that $425,000, you buy this thing, whether it's dividend paying stocks, whether it's real estate rental properties, you want to get paid, whether it's every month or every quarter, you're going to get some cash deposited into your bank account. That way now you have a new income, because with a lot of investments, you don't get paid unless you sell. If you buy a stock for $100 and then it goes up to $200, you don't actually make any money until you sell. And I want you to have some income. So if you can produce, let's say 10% income, which I know is high, but just go with it for the sake of this example. If you can produce 10% income on your $425,000 invested, well, that's an additional $42,000 a year in income. If you can get a 5% income, 5% yield, 5% dividend, 5% cash and cash return from your real estate, which is possible, well, now you're talking about half of that. $21,000 a year in income that you don't have to work to earn. And now this is income you can use to spend and buy some nice things, because now you have more income and less expenses. You don't got to pay for the credit card bill. You don't got to pay for the student loans. You don't got to pay for your car loan anymore. All you got to do now is pay for your basic living expenses. And now you have an additional $20,000 to $40,000 a year coming in passively, which now also buys you some more freedom. And what I mean by freedom is, well, if you were to not do any of this, and now you were just going to start living your life because you got $1 million windfall, well, that $1 million is only going to last you so long. I mean, if you're spending $100,000 a year, it's only going to last you 10 years. If you're spending $50,000 a year, it's only going to last you 20 years. And that doesn't even factor in inflation, because our dollars are losing value each and every day. So if you want to keep this money, keep it sustainable, and you want to be able to live your life, you got to keep doing the things that you normally do, and go to work, don't tell anybody you got this money, and now understand that you have more freedom and that you don't have as much financial stress as before, because now, well, you don't have the same expenses. You have more money, so if you want to go on a vacation, you can go on more nice vacations, you can go on more frequent vacations, and not have to worry about the price because you have that additional money coming in. This is where I want to remind you that $1 million, if you're 40 years old today, well, that's only going to go so far if you're living in the United States, because $1 million at $50,000 a year is only 20 years. Now, sure, you could take that money and you can go to a different country and live for a whole lot cheaper, but then you're not living inside of the United States. So if you want to build wealth, you got to be smart with this money. If you're winning a windfall, you're getting this big chunk of cash, be smart with it. Work to pay down your high interest debts, work to pay down your other debts, then you build some savings. Now you work to invest your money and work to pay down your mortgages, because mortgages are generally lower interest. That way you can continue to build wealth, buy your freedom, and have real wealth, instead of being one of the people that are just chasing the image of wealth.
Not paying taxes. When you pull money out of your 401k.
You weren't charged taxes while it sat there. What's wrong with you?
401ks are the most popular investment vehicle in the United States, but the studies show that most Americans have no idea of how they work. But that stops today, because I'm going to be going over 5 things you need to understand about your 401k